Now this is it, guys. You have two types of liquidity. You have the buy side liquidity and you have the sell side liquidity. If an old high gets taken out, means liquidity gets taken out. So that's high liquidity. Now, if an old low gets taken out, is the sell side liquidity. We anticipate the market trading to the nearest imbalance. Now, once a liquidity gets taken out in the market, it draws its attention, and the first thing is the imbalance. Usually, the imbalance. Usually, the fair value gap. And the second thing is the liquidity. Okay, in this kind of situation, you have a liquidity gets taken out, but then let's assume there is an imbalance right here. The market will respect the imbalance here, goes down, then takes out the liquidity around here. Takes out the liquidity, then let's assume it's a bullish trend. Then the market starts to make higher highs, higher lows, higher highs, higher lows into the zone. Now, this is how we leverage on it using the price alchemy model. First thing you got to do is you need to understand the trend. One. Is the market trading from the buy side liquidity or the market is trading from the sell side liquidity? Are we in an uptrend or are we in a downtrend? Now you need to discover that. After that, you need to know which liquidity gets taken. Which liquidity gets taken. Now this is how you know that, guys. A buy side liquidity gets taken out. Now you expect the market to trade right back into the nearest imbalance. There should be an imbalance. There will be a draw on liquidity for us here. There will be an imbalance. Value gap. So you expect the market to trade right back into this nearest imbalance draw on liquidity before taking out another liquidity above. So it draws back into a liquidity as a bias. Okay, it draws back into a liquidity as a bias before taking out another liquidity. That's in an uptrend. Same happens in a downtrend. It's a simple scenario. You just expect the liquidity to get taken out. Once the liquidity gets taken out, you anticipate the market to trade right back into the nearest imbalance. Then you expect it to get taken out again. You expect the market to trade right to the nearest imbalance, gets taken out again. Okay, it's as simple as that. It's so simple. Now, once you understand the market dynamics, in some situation, if I'm caught off guard, let's assume the market is going. Let's assume this is the market confluence. And I have a swing right here. Like the market is trading like from this zone. Let's assume the market is trading from this zone. Let's assume the market is trading from this zone. Okay. And I have a confluence that the market is going to reverse from here. I'll be looking for trades I'll be looking for shorts in this kind of trade. If I have a confluence that is giving me a confirmation that the market is going to want to sell, so I'll be looking for a sell a sell right into this POI to have another buys into this POI, taking out this liquidity and this liquidity. And probably if I have another confluence around here, and it will give me a confirmation that this market is going to get here and to get exhausted for it to sell back into the discount zone. In the next class, we'll be talking about the discount premium and the discount and merging the two of them together, the 50% price. So you want to be looking for buys around the discount. So we have the premium. I'm just assuming you guys know this before. Premium. Okay. So I have the discount. Okay. So once it gets taken out, you want to see the market gets taken out. You want to be looking for your entries in an uptrend. You be looking for your entries on the discount zone. Except you have some confluence around here that is giving you a confirmation that the market is going to want to sell into your discount. So you are free to be looking for sales into this discount zone before you have another market spooling up, goes down, spool up. Okay, this is where the patient comes in. Okay, this is where the patient comes in. Now you have your buyers on a weekly time frame. You have your entries around here. Practically, you will definitely have to wait for the market to trade right down into your discount zone before it starts to move. So basically, this is where patience comes in. This is where patience comes in. Okay, so we've spent a lot of time today. We're just gonna be calling it a day here. We'll be calling it a day here. So before tomorrow's class, I will make a live session explain the remaining concepts in this video. So I will upload it, let's say before 12 to 1 o'clock tomorrow, for you guys to watch, and I will give some materials that it will just be like 1 or 2 pages. So you can just take a glance through it and see what is going on there. Okay, it's not too much. It's not a PDF that you like. This is an heavy PDF. You can just glance through it, just check the pictures right there, and you see how the market is moving. Okay, in case you want to refer to it, in case you want to print it out. Okay, that's why I'll be giving you the materials, but it's really not necessary. Okay, so I will make a simple video explaining this particular concept, and the video will be uploaded tomorrow. Okay, once the market takes out a liquidity, you expect it to trade into an imbalance before continuation. Market takes out a buy side liquidity, you expect it to trade right into the imbalance. If this imbalance hold, the market sometimes might takes out the liquidity and still continue to trend. In this kind of scenario, it can take out the liquidity like this and still continue. Okay, in most cases, it means your bias is wrong, and then you just expect the market to trade right. Once your liquidity gets taken out, you expect the market to trade right into the imbalance around here for dumping. It's so simple. So you don't want to be looking for markets going up again. So it means your bias has changed. So without further ado, I don't want to give too much explanation in this video. So we don't find it very, very convincing when we are trying to study the market. So let me quickly take us to the chart and show us 1 or 2 there. Call it a day.
Okay, guys. So I will be uploading the videos. I will make the videos soon. So I will upload them for references. Okay, I think that's what I'm gonna do. So that I'll just make, I'll do some little cuts so that it won't be too much. Okay. So if you have any question, pertaining the understanding the liquidity, buy side liquidity, on how the market moves from one buy side liquidity to sell side liquidity, you are free to drop the questions on the chat forum. So the video will be uploaded before 12 o'clock tomorrow. Okay. Before 12 o'clock Nigerian time tomorrow. Okay. So you guys should anticipate. And I'll be explaining some concepts in tomorrow's class. So I want you guys to submit, to do an assignment. Now, what you gotta do is you go to your chat. Everybody, I don't care if you know this before. Okay. Now, what you gotta do is you go to the EUR USD pair and you go to the GBP USD pair. You mark out the last week and this last week and this week. You mark out, you do the markups for the buy side liquidity and the sell side liquidity till this particular date. Okay, on the 1 hour time frame, particularly on the 1 hour time frame, you go there from the last week to this week. Okay, you mark out the buy side when the buy side gets taken out, when the sell side get taken out. You mark out the imbalance. Then as the way the market is moving on the 1 hour time frame, you mark them out and you submit them to the chat forum. So I will observe them there, and I will give the diligent answers to them. Okay, so you do it on the GBP USD and you do it on the EUR USD. So I'll be anticipating the assignment before tomorrow, before I drop the video tomorrow. Hope you guys can do that. I will anticipate you guys can do that. So in the process, you're gonna be calling it a day from here. Okay, gonna be calling it a day from here. So just to round everything up, I will make some researches today. I'll make some researches on how to effectively make this class an enjoyable one. Probably if I'm gonna get a new gadget or probably get new stuff so that I can make this class an interesting one, so that we don't have any network issue, whatever. Like I said, guys, this is the first mentorship. Okay, this is my first mentorship. I don't literally I have the ideas. I've been trading this for apparently years. Okay, but I'm not interested in bringing in people into the system without understanding the system myself and making exploit out of it. Okay, I made sure I withdraw my first $1,000. I withdraw another funds before I discover, okay, yeah, I need to take this knowledge out. This is that. You understand? Okay, so from here we're gonna be calling it a day. So I'll be talking to some of my friends, if they can give me much more probably names of gadget I can get to make this class a very valid one. So so we'll be calling it a day from here. So thank you guys for. So I will expect my assignments, and I'll be expecting you guys. I'll be expecting you to be early and be punctual tomorrow in the next class. So I'll probably fix everything before then. So good night, guys.